Here is a number that stopped traders in their tracks this morning. Bitcoin has reclaimed the $65,000 mark on July 27, 2026, bouncing sharply from a brutal stretch that had seen it record its largest weekly drop since late 2022. The catalyst? A significant easing of US-Iran tensions, combined with Brent crude oil falling roughly 6% in a single session. Just days ago, oil was trading near $100 per barrel as geopolitical fears gripped energy markets and dragged cryptocurrencies down with them. Today, the script has flipped. Bitcoin is back above $65,000, Ethereum is outperforming, and risk appetite is returning across global markets. If you have been watching this space and wondering what on earth just happened, you are in exactly the right place. We are going to break this all down clearly, with real numbers and real context, so you understand not just what is happening, but why it matters for your portfolio today. To understand today's recovery, you need to understand what caused the damage in the first place. Last week, oil prices surged to $100 per barrel as Iran-related tensions escalated sharply, sending shockwaves through risk assets globally. When oil spikes to those levels, institutional investors and fund managers typically move away from speculative assets, including cryptocurrencies, and towards safer positions. Bitcoin felt that pressure directly. It had been struggling to hold above $65,000, with analysts noting that two distinct groups of BTC investors were actively selling into price strength each time the market approached that level. The combination of macro fear, rising energy costs, and profit-taking near resistance created a perfect storm for a sell-off. Bitcoin recorded its largest weekly decline since late 2022, a stark reminder that crypto markets remain tightly coupled to broader global risk sentiment, especially when geopolitical uncertainty is this acute. So what actually changed? The key development driving today's recovery is a reported de-escalation between the United States and Iran. After weeks of heightened rhetoric and fears of direct military confrontation, both sides appear to have stepped back from the brink, at least for now. This shift in geopolitical temperature has had an immediate and measurable impact on financial markets. Brent crude oil fell approximately 6% in early trading on July 27, 2026, one of the sharpest single-session declines in oil this year. For context, oil had previously climbed to $100 per barrel on the back of those Iran tensions, so a 6% drop from that level represents a very substantial reversal. When energy markets calm down, global risk appetite tends to return quickly, and crypto is typically one of the first asset classes to respond. That is precisely what we are seeing play out this morning. Many viewers ask why an oil price drop would push Bitcoin higher, so let us address that directly. The connection is not about supply and demand in any literal sense. It is about risk appetite. When oil prices spike due to geopolitical conflict, institutional investors read that as a signal of global instability. They reduce exposure to high-risk assets, including Bitcoin and Ethereum, and rotate into traditional safe havens such as gold, government bonds, and the US dollar. Conversely, when oil retreats, it signals that the immediate crisis has eased. Risk appetite returns, capital flows back into growth assets, and cryptocurrencies benefit. Today's 6% drop in Brent crude is being interpreted by traders as a meaningful signal that the worst-case Iran scenario has been taken off the table, at least in the near term. That one data point is doing a tremendous amount of heavy lifting in driving Bitcoin's recovery back to $65,000. One of the most interesting details from today's session is that Ethereum is outperforming Bitcoin during this recovery. When Ethereum rises faster than BTC in a risk-on environment, it often signals that investors are willing to take on additional risk and move further out along the risk curve into altcoins. Ethereum is considered slightly more speculative than Bitcoin, particularly by institutional investors who treat BTC as the digital gold benchmark. So when ETH is climbing faster than BTC, it typically reflects stronger confidence in the broader crypto market, not just a defensive safe haven bid on Bitcoin alone. This outperformance is a positive signal for the wider altcoin space. It suggests that today's recovery is broad-based rather than driven purely by Bitcoin short covering or algorithmic trading. If Ethereum continues to lead, traders will be watching closely for capital to rotate into smaller cap altcoins in the sessions ahead. From a technical standpoint, $65,000 has been a critical and contested level for Bitcoin throughout much of 2026. Analysts had previously noted that two groups of BTC investors were consistently selling at or near this level, creating meaningful resistance that repeatedly capped upside attempts. Today's break back above $65,000 is therefore significant, but traders will want to see Bitcoin consolidate above this level rather than simply touching it and retreating again. The key question is whether today's move is a genuine trend reversal or a relief rally driven entirely by the oil price drop. If US-Iran tensions were to re-escalate, oil could spike again and Bitcoin's recovery would likely be short-lived. On the other hand, if the de-escalation holds and Brent crude continues to stabilize at lower levels, Bitcoin has genuine room to push higher. The market is delicately balanced, and the next 48 hours of geopolitical news flow will be critical. Looking ahead, the short-term outlook for Bitcoin hinges on two primary factors. The first is geopolitical stability. If the US-Iran de-escalation holds through the week, oil is likely to remain under pressure and risk assets including crypto should continue to benefit. The second factor is macroeconomic data. With central banks still navigating a difficult environment of elevated energy prices and inflation concerns, any surprise data releases in the coming days could shift sentiment rapidly. For Bitcoin specifically, breaking and holding above $65,000 with sustained volume would be a constructive sign. However, traders should remain cautious. Bitcoin has visited the $65,000 level multiple times this year without decisively breaking above it. A genuine trend reversal would need to be supported by easing geopolitical conditions, improving on-chain data, and sustained institutional demand. Watch the oil price closely. Right now, it is acting as the single most important leading indicator for crypto markets. So let us wrap this up clearly. Today, July 27, 2026, Bitcoin has reclaimed $65,000 as US-Iran tensions ease and Brent crude drops approximately 6% in a single session. Ethereum is leading the recovery, outperforming Bitcoin and signaling broader risk appetite across crypto markets. This is not a random price move. It is a direct consequence of shifting geopolitical conditions, and it demonstrates once again just how tightly linked Bitcoin has become to global macro dynamics. The lesson here is straightforward. If you want to understand where Bitcoin is heading on any given day, you need to be watching oil prices and geopolitical headlines, not just the Bitcoin chart in isolation. The two are deeply connected, and today is a textbook example of exactly why. If you found this analysis useful, please subscribe for daily updates on crypto and financial markets, and drop your questions about today's moves in the comments section below. We read every single one.